everybody, Signa here with the OEC. So in this video we're going to talk about breaking down price patterns. To be able to break down price patterns effectively and to understand the measurement of each style of pattern as it's unfolding, we first need to understand the three parts that create all of the price patterns. The first part is basically the foundation of all patterns, the highs and the lows. And I know, guys, this might seem like I'm going back to the basics, and maybe I am. But with the style of questions that I've got lately, I think this is something that we really need to revisit. Highs and lows. How we get those highs or those lows, and what happens when we get there is real important when it comes to the style of the pattern that we're looking for. And I'll give you a really nice indication of what I'm talking about here. This is a deep trend. And at the bottom of that trend, you might have been looking for a flag. At what point would you have determined that this flag wasn't really a flag at all? How deep would it have to have come back before you said, you know what, I think that maybe this isn't a flag? Or here, with this good deep trend, and we had a flag, and then we had the continuation. I want you to now look at this flag. Look at the difference of this and the difference of this. Is there any difference? Notice that these trends have little bitty baby flags built inside of them. Why is that? A flag, a pendant, it's just a continuation pattern. It's just saying, hey, price is going to take a pause here. So it makes a move, it pauses to consolidate, and then it continues on. If it doesn't start to consolidate and it gives you a V shape, it's not a flag, it's a V shape reversal. Now a V shape could just be the pullback, right? So just because you see a V shape doesn't indicate that it's going to fail or that it won't continue. We had a V shape right here, and it continued on. Notice the sideways price action here, the same thing that we had here. We went sideways, and then we broke and continued to go. Well, we went sideways here, and we didn't break and continue to go. So what happened? Is there ways to determine the difference between this sideways action where we continued on and this sideways action where we reversed? Yes, there is. There is a way to do that. When it does do this basing pattern, that is a great indication that we're going to get a failed flag setup. It's one of my favorite patterns. So highs and lows, back on task. Every single pattern is made up of highs and lows. And it's in the construction and in the formation of those highs and lows that a story is told and that warnings are given, that an indication of continuation or the beginning of a reversal is presented to you. When you're learning to tear apart price patterns, you want to pay very close attention to the highs and the lows. How we build them, how we come down into those lows. What happens when we get there? Is it a V-shaped reversal? Did we stay there and consolidate? When we are in that consolidation, are we trending up with higher highs and higher lows, or are we trending down with lower highs and lower lows? Without setting those higher highs and higher lows, we don't have trend. The same in reverse. Without setting those lower highs and lower lows, we don't have trend. Think about the buying and the selling that's going on when you're looking at that price action. Look at the bodies and the wicks. Now, if all trend has flags and pullbacks and continuation, at what point do you determine that a pullback isn't a pullback at all and is instead a change in market sentiment? When do we determine that the trend has ended and that we should be looking to go the other way? One of the ways that you can do that is by looking at the clock if you're trading on an intraday basis. So we've been on a tick chart. I want to take us out to a regular time frame now. So here we are on a 1 hour chart. Pay particular attention to the highs. Notice the first time we got to the 1100, a V-shaped reversal. But the next time we got up there, we consolidated for a little bit, and then we reversed. Now that's a double top formation. They were both reversals. Let's look at those reversals a little better. The first time we got there, this is what I call a hard rejection. It wasn't just, no thank you, you shouldn't go here, turn around and go back please. It was a heck no, get the heck out of here, smack down, beat down, hard rejection. No kidding around. Get the heck out of here. Look at that thing, right? Come over and look at this one, though. Completely different kind of rejection. So a little more indecision when we got there. And when price did leave, it didn't go very far. It didn't go as far. When it tried to come back up again, it failed. It couldn't even match the previous high. And that was all the market needed to see. This is a 1, 2, 3 fail right there. So it gave up, and where did it go? It just came back and reset the lows. These highs and lows, guys, they matter. Now, the next time we got up into that area, we had that same consolidation again. Only this time, the rejection was very, very weak. And we finally broke through all of that. All of that resistance that was overhead was finally resolved, and it became support right there. It was no longer holding price back, and instead it was holding price up. And then we got a new high. Now look at that new high, and it didn't get there and drop. It got there and thought about it first, right? And then it pulled back, soft rejection. It tried again, and it couldn't even match the previous high. That's all the market needed to see. Gone. Drop. Where? Right back down to the low, to the support level that had been built here. So the highs and the lows, when we're looking at price action, whether it's head and shoulders, cup and handles, flags, the highs and the lows, they matter. It matters how we get there. Was it a deep, fast, strong, ripping run to the upside? Or did it slowly grind its way up there? Because I can tell you when price moves very quickly and it doesn't slow down and it doesn't pause to gain energy, when it gets to a rejection point, it will take a hard rejection. There's a liquidity vacuum drawn behind it. There's nothing to hold it up, and it'll fall right back again. So when you're watching price make a move and it's running towards a direction, look at how it's running in that direction. Because if it's moving with strength, with trend, with a stair-stepping pattern of move 5 forward, take 2 back, move 5 forward, take 2 back, that trend pattern with strength and wave, that's a strong market. When it gets to resistance, it's more than likely going to work its way through it. But if it's moving very fast with very deep candles and it's not pausing and taking a breath, when it gets to a solid area of resistance, it's going to take a smackdown. Paying attention to that kind of price movement is where you can find opportunities to trade. It's where you can start to begin trusting what you are looking at. You cannot treat all flags the same. They're not. Same with a cup and handle, head and shoulders. It doesn't just matter what time frame you're on. It matters how those patterns are formed, what the highs and the lows of those patterns are telling you. So take the time when you're studying the charts to really look at the bodies of the candles and what those candles are trying to tell you. There's a story there. Now, in the current market environment, a lot of our patterns are failing. Very clean setups, very recognizable trade triggers, and they fail. And it's not because you're doing something wrong. It's not because you didn't happen to see some warning or indication that it wasn't going to work. It's because in the current market environment, there is so much volatility that it is breaking the pattern. Unfortunately, there's nothing you can do about it. You can either choose to ignore patterns or get more particular about the ones that you trade or sit out. So guys, that's the first video, and we're going to go through all 3 parts and pieces of the formation of patterns. Highs and lows is the foundational structure of every single pattern. So this is video 1, highs and the lows. I do appreciate your time, and I look forward to seeing you at the next video.